The market does not have any direction now. It is moving up one day and moving down the next day, responding to headline news regarding crude prices, foreign portfolio investment flows, and speculation on what the Fed might do in the next policy meet. Nifty is likely to move in the 17,500 range in the near term. The market is unlikely to move up sharply in the short run unless there is some positive news from the war front which can bring crude prices sharply down. A major concern for equity markets globally is the stubbornly high inflation in the US and a hawkish Fed. A 50 basis point interest rate hike by the Fed is possible in the next policy meet. Crude has again risen sharply by more than 20% from the recent lows. Now it is around $123 a barrel. Storm has impacted crude exports from Kazakhstan, and the US crude inventories show a steep decline. High crude prices will lead to high inflation and lower GDP growth in India, particularly when the crude prices remain elevated for a longer period. This is negative from the market perspective. A cautious investment strategy is advisable at this point in time. Sectors like IT, pharma, and export segments are safe since they won't be impacted by high crude prices and high inflation. In fact, they gain from rupee depreciation. FMCG stocks will face margin pressure from rising inflation and high input costs. High cost of coal will impact the margins of cement companies. Financials are in a sweet spot due to rising credit demand and improving asset quality. The interest rate hike expected this year also will benefit financials, especially leading banks and housing finance companies. More importantly, valuations in this segment are fair.